Pablo, I just remembered I didn't give the bonus question that I was going to stump people with.
Yeah. What's the bonus question, Greg?
All right. Well, I see we've got about 50 people still waiting. You guys get the bonus question. All right. So I showed you that cash investment would have to be 18% worse than the Great Recession for it to still make sense, right? For the financed investment, right, it would have to be half as bad, right? So by seeing that, you might lean more towards a cash investment. But I think investing in financing your rental properties right now is the best move for you, all right? And here's why. It's because when you invest in rental properties, first of all, I don't believe that it's going to be as bad or anywhere near as bad as the Great Recession. My belief based on data and talking to other people, right? Yours may be different. So I don't think it's going to be nearly as bad. Even if it was, I would still invest with financing. And here's why. Because I know after a 10 or a 20-year hold, my overall home price appreciation is going to average about 4% a year, a little bit over that. I know it. It's happened time over time. It happened to me investing prior to the Great Recession and after the Great Recession. So I know it. The other thing is that through this stimulus package, there is a tremendous amount of capital that's being infused into the economy, right? There are more dollars being pumped into the economy, and over the next coming years, you're going to see more dollars in the economy than goods and services. That's another way of saying a term that I love as a rental property investor, right? What is it, Pablo? What am I talking about?
I wish I could take credit for getting this, but Tuan already put it in the chat. Hedge versus inflation. Camilo just put it in. Inflation. Yep.
And some of you who are on the group, you read my post about recommending a great podcast to listen to. I'm going to steal this from my friend Keith Weinhold on the Get Rich Education podcast. Keith calls it the triple crown, right? When you're a rental property investor and you buy with smart leverage, you buy with smart debt, you win the triple crown. Because in inflationary times, inflation tends to bring up the price of your rent, and it tends to bring up the price of your home. So that's two legs of the triple crown, right? What it also does is your debt payments, because you got smart debt, your debt payments, interest rates low right now in the 3s, which is incredibly low, and it stays the same. So while the value of your rents goes up and the value of your home prices goes up, it gets easier and easier. The debt payment gets devalued, right? It becomes easier to pay off your debt with that same dollar, simply because you're riding the wave of inflation. So while for those who stayed on here, the 45 or so folks who stayed on here, you got the extra bonus question here, which is why I believe those who invest right now with smart debt are setting themselves up for real long-term wealth, even in the face of what I just showed you as far as a cash investment would actually sustain more of a price decline. So there you go. There's your bonus.
Drop the mic, Greg. Walk off. You're good, man.